We're seeing a wave of layoffs to start 2024, especially in software at Unity and Twitch, along with some CEO changes at Twilio and Match. What does it mean for the sector's long-term growth outlook? Deirdre Bosa has that for us in today's Tech Check. I wouldn't say it's broad in terms of the layoffs, Deirdre, but it does tell us some things.
Yeah, and it's more evidence that the state of software is complicated. It always has been. On one hand, there's signs of a comeback, like recovering revenue growth and multiples. AI, of course, a new tagline, but that is from peak levels. There's a broader question here, and that is, has software permanently re-rated instead of a comeback? Are we in a new normal? CEO replacements and layoffs at these once software darlings, you mentioned them, Twilio and Unity in particular, that is complicating the recovery story. And a few longer-term charts that we're going to show you, they tell us how far the sector has fallen. The conventional Wall Street wisdom is that the 2022 software slump, it was driven by the Fed and interest rates. There are, however, deep fundamental issues at play here within the sector as well. This is a chart that shows you the revenue growth rate for a basket of software names, including Adobe, Microsoft, Datadog, Snowflake, and others. You can see that it peaked in 2021 at around 50%, and it isn't expected to break 20% in the foreseeable future. So this would be the new normal. BofA sums up the challenges in the sector as such. It's prone to hype, overvaluation, promotional management teams, non-GAAP/incomparable between company metrics, high stock-based comp, and is home to cringe-worthy conference calls. We've all been on a few of those. I would also add here that there's been the commoditization of the once hottest, buzziest software products like Zoom and Slack, and this idea that mega caps, they can do it cheaper at scale, and they're good enough. On the positive side, though, the software reset, or the SaaSacre, as I've heard some in the Valley call it, that could provide new opportunities. Software could yet be the sector with the most interesting M&A prospects and new listings. The HPE Juniper Networks deal that you guys covered, that's partly about software and about two legacy tech companies combining to create a better AI proposition. The Journal reports that a $35 billion deal between Synopsys and Ansys could be next. And keep in mind that when the IPO market reopens, we are likely to get another wave of investable software names, this time with AI features and business models. So don't count it out, but this new normal could be an opportunity just at a far lower level than what we've seen over the last few years.